The coronavirus is certainly of some concern, and of course I'm speaking from a market point of view, not as a medical point of view, since I have no experience one way or the other with medicine, other than being a patient. But markets tend to freak out from time to time, and the coronavirus, I guess, is one of the latest opportunities for it to freak out somewhat. Um, I'm, I'm not going to minimize the severity of this. There does appear to be a disease of unknown origin that's spreading very quickly. It doesn't appear to be terribly fatal, but there have been some fatalities, and it's certainly something for people to be worried about, especially right now as this disease is kind of hitting just as the country of China is in motion internally for people traveling for Chinese New Year. So there's a lot of opportunity for the virus to spread internally and externally, and it is of some concern. We saw the market decline on Tuesday. I'm talking U.S. market Tuesday. It had declined in Asia prior to that. On coronavirus fears, we then saw the U.S. markets rally Wednesday morning on the story that China was doing something to contain the coronavirus. That in itself is a tell, because realistically, was China going to do nothing to contain a killer virus? Of course they were going to do something. So the fact that the market rallied on the story that the Chinese government was doing something about controlling a major health hazard was kind of silly. And it also just shows you that the initial freak out was a bit much. The precedent for this is, if you want to go back and look at market history, there was the SARS virus, which was several years ago, and it had sort of a similar type of trajectory. An unknown, potentially very serious virus originated in China. There was global spread. There were some fatalities. People freaked out, but ultimately it was I'm not going to say a passing phase, but the results were not long lasting to the vast majority of people and companies. And I think that's what you're seeing now. The reaction is meaningful when you talk about companies with exposure, such as Las Vegas Sands, or any of the companies that have real exposure to Macau casinos, certain Chinese travel stocks, companies that benefit from people being out in public or traveling places. And you do have to wonder if this becomes a bit of a broader scale fear. Do people cut back their travel? Do airline service in China see fewer passengers? That's, I think, where you want to look in terms of how it affects Microsoft, Apple, a lot of the market leaders in the U.S. It's at best it's background noise. So treat it accordingly. It's certainly, I really do not want to minimize it from a global health perspective. That's not my intention by any means. But unless this thing proves to be far more contagious and lethal than we're seeing now, to the point where people really, really cut back a lot of the day-to-day activities that they engage in, I wouldn't stress too much about it from a market perspective. And I would sort of think that this fades into the background, especially if global health authorities get a real handle on the problem.